HIMS reported earnings. The stock is down 13.5% in the after hours. It's absolutely brutal. I got so many requests to do an update on HIMS and HERS. And I have to say, guys, there's a lot of things that I like in this report, but there's a few things that I don't really like in the report. And those things, they shouldn't really come at a surprise to anyone. And I'm going to talk about them. But before you get upset about the 13 or 14 or 15% move, you have to remember that HIMS is up 151% year to date. Anytime you have a stock that's up so much, even though earnings were great, the stock will most likely decline because the stock was going up in anticipation of a good report. So that should not really be a surprise, and I wouldn't really be too upset. Now, in terms of HIMS, amazing numbers: 73% revenue growth, 220% net income growth, 109% adjusted EBITDA growth, subscribers 31%, now it's at 2.4 million subscribers, monthly online revenue per average subscriber at $74 per subscriber, or 30% year-on-year growth. So those are mind-blowing numbers from HIMS and HERS. Now the question is, why is the stock going down? And the answer is slowing down in momentum. The company has had its first ever quarter-on-quarter decline in revenues since it went public, and revenues declined from 586 to 544. Now this is really normal because now they can't really sell GLP-1s at a major scale just like they did a few quarters ago. So it's really hard to compare quarter on quarter. And the fact that HIMS is still up 73% year on year, to me, it's massive growth. And I would not be too worried about it. But it wasn't just about revenues with HIMS and HERS. If you look at their monthly online revenue per subscriber, it also decreased from $84 to $74. And this is because, again, they can no longer sell compounded GLP-1s at a major scale. And the compounded GLP-1s is one of their most expensive offerings. So, of course, their average revenue per subscriber is going to decline. And it did decline by $10 quarter on quarter. And you also have number of subscribers. It didn't actually decline, but it barely went up, I believe, 70 or 80,000, which isn't really what we expect from HIMS. HIMS normally grows 200,000 a quarter. And now the growth has massively decelerated quarter on quarter. And it's very hard to continue without selling compounded GLP-1s at a scale. But HIMS is still going, and they're still putting up very impressive numbers. So to me, I'm not really shocked at all, and I would not expect the company to grow 50, 60, and 70% forever. Now, this is why the company is front-running those news, and they're acquiring Zava. And I did say this before in my previous videos, that anytime a company starts making acquisitions and they start setting 2030 financial targets, they're pretty much telling you that their domestic business is about to decelerate in growth. Same thing happened with Celsius. With their acquisitions, they were desperate. And it was well known, and it showed up in the numbers, that they decelerated in United States growth, and it even went negative. And it's the same thing with other companies, and it's the same thing with HIMS. That's why HIMS is expanding right now internationally, because HIMS growth in the United States is about to slow down. And you would not expect HIMS to grow 50% forever. I think 15, 20% in the United States is reasonable, and I think that where it will most likely sustain itself. But they only paid $265 million for this acquisition. My estimate was $300 million. $265 is peanuts, is dirt cheap for a company like Zava, which is going to bring in, I believe, 1.4 million members, and it's going to bring in $50 million in revenues for the remainder of the year. So this is like 120 million annualized. For $250 million, this is dirt cheap for a company like Zava. So they pretty much paid nothing for the acquisition. It was a steal, and HIMS team did an amazing job acquiring Zava. And now, thanks to Zava, they will be able to expand in Europe through weight loss, sexual health, dermatology, and hormone health. And in Canada, they're going to expand with weight loss. Europe has 160 million. in terms of population, Canada has 30 million. So HIMS TAM just went up by like 80 or 90%. And the growth from here is going to massively accelerate outside the United States. And this is where the growth will come from, which should offset a lot of the decline in growth in the United States business, which is expected to continue declining going into 2026. Now, most importantly, the balance sheet of HIMS is as strong as ever. They have $1.1 billion of cash with no debt. So HIMS could still do 2 or 3 more acquisitions like Zava if they wanted to. They can buy back stock if the stock goes down a lot. And they did buy back stock in 2024, and they reduced share counts actually in a few quarters, although they have a lot of stock-based compensation. But $1.1 billion of cash, this is a lot of cash with no debt for a company like HIMS, for them to do acquisitions and do other whatever they want to do to re-accelerate the growth. So I'm not too worried about the growth decelerating. I think this is expected, and the market is kind of waking up to this fact. And what the CEO is trying to do, he's trying to mainly turn HIMS into a business like Amazon Prime or like a Costco-like healthcare membership. And HIMS right now is more of you could go in HIMS and then you get your treatment. And once your treatment is done, you leave HIMS. You're not staying in HIMS. But this is why the CEO is introducing lab testing. With lab testing, it's more about preventative healthcare problems. So if you're preventing a healthcare problem, this is recurring revenue, high margin business model for a company like HIMS. So HIMS will be much more sticky with lab testing. And this way, you don't just come in HIMS and leave. You come into the HIMS platform and you keep doing the lab testing to maintain your health and to track your health. So you pretty much never leave the ecosystem and you keep your subscription. So this is the goal of making HIMS a more of a sticky subscription, something that you really can't live without, something that every single household member needs. And that's still early on, but it starts with lab testing and it continues with their offerings, and it's going to be expanding into other offerings in the future. And it's very, very promising for the company. Now, most importantly, the CEO reiterated the 2030 target of $6.5 billion of revenues. The company right now is trading at 5.7 times sales, which could be a little bit expensive on a historical average, although many different growth companies are trading at 10, 20, 30, 50, even Palantir's like 70 or 80 times sales. So 70% revenue growth for 5 times sales isn't too expensive for HIMS. But for my own estimate for now, I'm going to take the $6.5 billion for 2030, and assuming that they reach the $6.5 billion, and we're going to time it by 5 times sales. So assuming no multiple expansion, no multiple contraction, we get a $32.5 billion market cap. The current market cap after the decline is around $12 billion. So we divide it by $12 billion, we get around 170% on the upside over the next 5 years with an amazing company like HIMS with $1.1 billion of cash and no debt. To me, this is an amazing value proposition. So I couldn't care less what happens in the short term. HIMS is a crazy stock. It has a lot of crazy declines up and down, and you just have to be able to take the volatility if you want to invest in it. It's still a core holding of mine. I own it from $7 per share, not selling it anytime soon. My thesis remain intact, and I couldn't be more optimistic about the long-term thesis of HIMS, especially after 2026. Once they integrate Zava and they expand internationally, it's going to be beautiful. So that's just my opinion on HIMS. Thank you for watching. Not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.